Okay, Faye, that was a super question, and you are bang on the money with the way you're looking at it, because false signals are a real problem with trading, and that's what kind of breeds the gambling element of it, because you're not quite reading what the chart is, you're just kind of taking a punt. So let me kind of put you in the right direction. This is oil. I was looking at this the other day, and I traded it sort of for the guys. I would work on a number of screens, as you know, but I put two side by side. So initially what I'll be doing is in my peripherals, I'll have my hour, and then in front of me, I'd have my trading screen. All right. So let's say we get a setup, and you just basic setup, a break of support and resistance. Doesn't really get any simpler than that. Look at your hourly. So what time is that? That's 4 o'clock. So on the 4 o'clock candle, that broke a support and resistance line that I'd drawn in, an area of interest, if you like. Okay, so when was that? That was the 4th. So rather than scroll this back because it takes ages, I'll just quickly nip back to the 4th. Just put myself a little vertical line so I can recognize what I'm looking at. Okay. Why did I pick on that candle and not one of these? Very simple, real world stuff. I would be awake at 4 o'clock in the afternoon and still trading, because my trading day doesn't finish till 5. This one is 1 o'clock in the morning. I'll be snoring my head off in the land of Nod. Okay, so that would have been the first real signal. Now I'd have waited for that signal. Now, as you can see, there it is there. That's the 4 o'clock candle. So at 4 o'clock, it kind of starts here. There's no traders yet because it hasn't found its way into this section. All right. So you actually be waiting at 5 o'clock, which is here. So I'll just put a line there so you can see it. Why is it 5 o'clock on the 5 minute? Because it takes 1 hour for that candle to form, and you wait for the candle to finish. All right. So as soon as that breaks, it's go time. And then you sort of watch it. But what are you watching for? Well, you're watching for a test of something that you can use as being tangible. Now, in this instance, it is an 8-period EMA, this black line. And why is the 8-period important? Well, it's fast enough to give you a signal, but slow enough to keep you out of the noise. And if you ever do any reading on Japanese candlesticks, they were made up from an 8-period moving average. It just seems to be sort of the benchmark, if you like. Okay, you often hear it called the T line, target line. Okay, so we know. So what you're doing is you're waiting for a tag of it and a rejection or an absolute break of it. So if the price is coming this way and you believe it's down, you want it to close underneath. Okay, but here, because you are broken the resistance level here, or support and resistance level rather, and you're looking for it to move higher, you're looking for a tag in the direction that you're going. So here it is broken that way, going up to this level. So it comes down, it's tagged, it's closed above. There is your entry. Put it a couple of ticks above the candle to show you a little line. So a couple of ticks there. So you kind of be entering around this point. Don't ever worry about missed ticks. That is your entry point. Yes, you can get in lower down, you can get in higher up, but that is defined. You know why you're getting in and how you're getting in. And what I mean by that is, it is the tag and rejection of the moving average, and the price must come to you. That is it. It's safer than trying to get it down here. Okay. And then what happens? Next candle takes you in, a couple of pips, dances around, set your target realistically. I mean, from there up to the next support and resistance line, area of interest, is 28 ticks. You want to be break even at 14, in other words, halfway. And there you go. You would have been tagged, paid, pull your stop to break even here, and then just let it play out. If it comes and stops you out, so what? But you could have there's your first target, another target in the middle of there, sort of 2/3 up, whatever you choose, and then a final target up there. If you get two of them, result, you know, because you're better off having part of a winner than 100% of a loser. And I hope that kind of makes sense. So basically what you've done is you've taken a trade idea from the high time frame here, but then you've implemented it here. And the rules for this are different to what the rules for that are. And the reason being is very simple. If you're trying to do your trade setup just on the 5-minute chart, lots of noise, and that lots of noise gives you your false signal. Hope that kind of makes sense. Anyway, have yourself a great day. Enjoy the coffee, because I am. And I'll catch you on the next one.